Listen to me. If you are sitting there thinking, Susie, I'm retired, or I'm about to retire, why on earth do I need to care about my credit report? I'm done buying houses, I paid off the car, I am out of the debt game. I need you to wake up. I need you to pause right now and listen to what I am about to tell you, because this is a massive, dangerous misconception that can cost you your financial security at the exact moment you can least afford to lose it. Your credit score and your credit history do not go into retirement just because you do. In fact, during your retirement years, your credit file is a prime target, and how it is managed dictates everything from your insurance premiums to your ability to downsize your home, or, heaven forbid, help a grandchild out. And at the absolute center of this world sits a company named Experian. So, what is Experian, and how does it actually work? Let's strip away the corporate jargon. Experian is not a government agency. They do not work for the federal government, and they certainly do not work for you. Experian is a publicly traded, multi-billion-dollar credit reporting agency. They are a business. And what is their product? You. Your financial behavior is their product. They gather, organize, and sell information about how you pay your bills, how much debt you carry, and whether you are a safe bet for companies to do business with. Along with Equifax and TransUnion, Experian is one of the big three credit bureaus that holds the keys to your financial reputation. Think of Experian as a giant digital filing cabinet. Inside that cabinet is a file with your name on it, and every single month, your credit card companies, your mortgage lenders, your auto loan providers, and even some utility companies feed data into that file. They report whether you paid on time, whether you missed a payment, how much credit you are using compared to your limits, and how long you've had those accounts open. Experian takes all of this raw data, mashes it together using a formula created by the Fair Isaac Corporation, which you know as your FICO score, and spits out a three-digit number ranging from 300 to 850. That number tells the world exactly how responsible you are with your money. Now, I know what you are feeling right now. There is a deep, underlying fear for so many of you when it comes to these credit bureaus. It's the fear of the unknown. It's the feeling of being watched, of being judged by a computer algorithm that doesn't know your heart, doesn't know that you worked 40 years for your nest egg, and doesn't care that you are a good person. It feels like a system where you have zero control, where a single mistake or a fraudulent charge can completely wipe out decades of pristine financial discipline. And for those of you entering retirement, that fear is amplified because you are transitioning from a time of earning money to a time of living on a fixed income. You don't have 20 years of a salary ahead of you to recover from a financial disaster. You ask yourselves, what if someone steals my identity and ruins my score? What if Experian has wrong information about me and I don't know it? Why should a company I never signed a contract with have the power to stop me from renting a beautiful apartment in a retirement community or lock me into a higher interest rate on a downsized condo? These are valid questions, and you have every right to be protective of your peace of mind. But you cannot let fear paralyze you into doing nothing. Ignorance is not bliss. Ignorance is financial suicide. You need to understand exactly how Experian works so you can make it work for you, protect what you have worked so hard to build, and take control of your financial destiny. Let's look at how Experian actually uses your information, because this impacts your daily life in ways you might not even realize. Let's say you decide to downsize. You sell the big family home, you have a beautiful chunk of cash in the bank, and you decide you want to rent a luxury apartment or a condo where you don't have to worry about mowing the lawn or fixing a leaky roof. Guess what the landlord is going to do before they hand you the keys? They are going to pull your credit report from a bureau like Experian. And if your score is low, or if your report is riddled with errors, they can deny your application or demand a massive security deposit, even if you have hundreds of thousands of dollars sitting in your retirement account. They care about the score. What about insurance? This is one that trips up almost everyone. In most states, car insurance companies and homeowners insurance companies look at a specialized credit-based insurance score, which is derived from your Experian credit report. They have found a statistical link between low credit scores and higher insurance claims. So, if you let your credit score slide in retirement because you think you don't need loans anymore, you could see your auto and home insurance premiums skyrocket. On a fixed income, that is money straight out of your pocket that should be going toward your travel, your healthcare, or your peace of mind. Do not let yourself fall into the trap of financial laziness in retirement. Your credit profile at Experian is an extension of your financial security. It is a reflection of a lifetime of hard work, discipline, and honor. You must guard it, you must monitor it, and you must protect it with the same fierceness that you protect your savings account. Take these steps today. Go get your report, check it for accuracy, freeze your files if you aren't using them, and stand tall in your financial power. You have earned the right to a secure, peaceful retirement. Now do what it takes to protect it.